Welcome to Self-Tax YouTube channel. If you're an expat, business owner, or landlord and you're not subscribed yet, this channel is for you. We break down tax rules, deadlines, and changes clearly and simply. Hit subscribe and stay compliant, without the stress. If you have been doing self-assessment for years, you probably have a system that works for you. But from April 2026, that system is changing. And understanding exactly what is different before it happens means you can prepare properly rather than scramble later. In this video, I am going to walk you through what MTD for income tax actually changes, what stays the same, and the practical steps you can take right now to get ready. Under self-assessment, you report your income once a year. You gather your records, complete your return, and submit it by the 31st of January. MTD for income tax changes that structure. Instead of one annual report, you send for quarterly updates throughout the year, and then a final declaration at the end. The same income is still being reported to HMRC. The difference is that it goes in stages across the year rather than all at once in January. A lot of people worry that MTD changes everything. It does not. The income categories are the same. Self-employment income, rental income, and other sources are still reported the same way. Your tax bill is calculated using the same rules. Personal allowances, reliefs, and deductions all still apply. HMRC is still the body you report to. And the 31st of January deadline still exists. It just applies to your final declaration rather than a full tax return. The tax system itself has not changed. The reporting rhythm has. The quarterly updates follow the tax year, so the periods start from the 6th of April rather than the 1st of January. The first period runs from the 6th of April to the 5th of July, with a submission deadline of the 7th of August. The second runs from the 6th of July to the 5th of October, deadline the 7th of November. The third runs from the 6th of October to the 5th of January, deadline the 7th of February. And the fourth runs from the 6th of January to the 5th of April, deadline the 7th of May. Each update is a summary of your income and expenses for that period. It is not a tax calculation and it does not trigger a payment on its own. When the quarterly deadline arrives, what you are actually sending is straightforward. Your software pulls together your income and allowable expenses for that 3-month period and sends a summary to HMRC through the MTD system. You are not filing a detailed tax return. You are not calculating your tax liability at that point. You are simply keeping HMRC updated with a running picture of your figures as the year progresses. Most compatible software makes this a relatively quick process if your records have been kept up to date through the quarter. One practical change that affects everyone coming into MTD is the digital records requirement. HMRC says you must keep your records digitally using software that is compatible with MTD. This means moving away from paper records or standalone spreadsheets unless those spreadsheets are connected to approved bridging software. HMRC maintains a list of compatible software options, and both free and paid options are available. Choosing software early and getting comfortable with it before your first quarterly deadline is one of the most useful things you can do to prepare. After your 4 quarterly updates are submitted, you complete a final declaration to close the tax year. This is where you confirm all your figures, add any income not captured in the quarterly updates, and claim any additional reliefs or deductions. The final declaration deadline is the 31st of January following the end of the tax year. For the 2026 to 2027 tax year ending the 5th of April, 2027, the final declaration is due by the 31st of January, 2028. One important point. The final declaration can only be submitted once all 4 quarterly updates have been sent. Keeping on top of the quarterly deadlines makes the year-end process much smoother. MTD for income tax is being introduced in stages based on qualifying income. If your gross income from self-employment or property is above £50,000, you enter MTD from April 2026. Above £30,000, you enter from April 2027. Above £20,000, from April 2028. The threshold is based on gross income from those sources, not profit after expenses. If you are unsure whether you are in scope, checking your gross income figure against those thresholds is the right starting point. The biggest practical shift with MTD is moving from an annual records habit to a quarterly one. Under self-assessment, you could gather everything in December and January and still meet the deadline. Under MTD, your records need to be reasonably current at the end of each quarter so your update is accurate. The good news is that this does not have to be complicated. Setting aside time each month to reconcile your income and expenses means the end of each quarter becomes a straightforward review rather than a rushed effort. Many people who adopt this habit find it reduces their year-end stress significantly. If you want to be in a strong position before April 2026, 3 practical steps make the biggest difference. First, choose your MTD-compatible software now, not in March 2026. Getting familiar with it early removes the pressure of learning something new while deadlines are live. Second, start keeping digital records of your income and expenses now, even before you are mandated. The habit is easier to build when there are no deadlines attached. Third, note the 4 quarterly deadlines in your calendar with a reminder set at least 2 weeks before each one. That buffer gives you time to review and correct anything before you submit. So what is actually changing when MTD for income tax comes in? The structure moves from 1 annual return to 4 quarterly updates plus a final declaration. Digital records become a year-round requirement. The 31st of January deadline remains but applies to the final declaration. An irregular quarterly habit replaces the once-a-year approach. What stays the same is what gets taxed, how the bill is calculated, and who you report to. The earlier you understand the structure and build the habit, the more straightforward April 2026 will be. Next up, exactly what digital records HMRC expects you to keep under MTD. Thanks for watching. Subscribe to Self-Tax for clear practical UK tax guidance. Stay informed, stay compliant, and stay one step ahead of HMRC.